We're going to continue discussing what I look for when I trade. Plus, Papa John's Pizza is looking kind of bearish. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Today I'll be continuing with the training on what to look for to find these setups. Thanks for all your comments. I've got a lot of new things on the training list. But don't stop. Tell me more. If you can't think of anything else to say, just let me know where you are in the world. I'm pretty sure you guys already know that I'm near Dallas, Texas, in the south central part of the U.S. And in a few weeks, I'll be in northern Indiana for my nephew's wedding, and I'll knock out a couple of videos from up there. Before we get to the training, I want to look at our open trades and a new trade setup on Papa John's Pizza. Remember, you can speed this video up by clicking the gear icon in the lower right of the video and selecting a new speed. How about if we look at those open trades? Well, I was thinking that the AUDNZD looked like it was about topping out here, so I moved my stop up to 105.23 just in case. I wanted to lock in some of this goodness. Could keep going though, so we'll give it a chance. Ripple came back up here and tested the bottom of the range, but did not close back in the range, so I'm still in this. It's looking a little better today. We'll see how it goes. Well, Tesla's a big bag of It pushed down here pretty darn close to our target, and now it popped back up and closed back inside the triangle, so I shut her down at 226.83, and of course it's dropping now, but that's okay. No point crying over spilled milk right now. So we took a loss of about 1,300 on this one. That's no big deal. Done with Tesla for right now. Okay, let's take a quick look at Papa John's setup, and then we'll get back into this pattern training. I like this descending triangle, but for a couple of small details. It's only recently showed this drop in volume right here. This pattern has been in play at least since right here, arguably back to here, but we didn't really see any volume drop off until right in here. So I'm not sure what's up with that, but at least we're seeing a bit of a decline now. Also, it's a bit weird that these 2 days were hugely bullish after a negative earnings statement right here. That seems weird, but that's the reason why I don't do fundamental analysis. I don't have to figure things like that out. I can just assume that it's built into the chart. Anyway, this is also not the most ideal setup because there doesn't seem to be a drop in the volatility at all yet. Of course, the volatility lags because it's 14 days behind the volume numbers, and there's still quite a bit of time. I wouldn't expect this thing to break for another week or two. Of course it could, and I'll be on it if it does. So the reason I'm showing you this right now is that the descending triangle is a powerful pattern, and the support level here at 42.22 started life as a gap up right here. So a gap is a powerful support or resistance level, and it's been tested a bunch of times here, 3 times here, 3 times here, and 3 times here, and these recent ones have shown huge price rejection in the form of these long wick candles right here. And of course the volume is beginning to conform a little bit here, so I'm liking it better and better as time goes on. Just to be sure everyone is up to speed, a descending triangle consists of a strong support level, in this case right here, 42.22, and a series of lower highs that continually put pressure on this support level. As I was saying earlier, ideally I want to see declining volume and volatility during the course of this pattern's forming. The declining volume and volatility are indicators of traders increasing disinterest in the pattern while they wait for it to break out. Basically, the traders are just bored. In this case, there's still time to get to that. Like I say, this thing could go for another couple of weeks before it breaks. I'll be looking for an explosive break of this support level. So the setup is the way I like it. Simple. I will sell a daily close below the triangle or below the 42.22 level. We want to see at least average volume on the breaking candle to trade a full position. So the candle that actually breaks and closes down here, you need to come down here and look at your volume, and the volume bar should reach up as high as the average to take a full position. However, if you've got at least 75% of the average volume, you can open a half-size position to reduce risk. You can calculate 75% of the average volume by dividing the full volume here with the average volume here, and you should get at least 0.75. If you don't get that, stand aside. Watch the trade go on without you. When you enter the trade, the stop loss should be 1.5 times the ATR, and the first target should be 1 times the ATR. So on the breaking candle, look over here for the average true range. Multiply that by 1.5 and put your stop loss above your entry point by that amount. Your target will then be 1 ATR below your entry point. If after entering the trade we get a candle that closes back inside the pattern, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. And that's the new Papa John's pizza setup. Okay, let's talk some more about pattern recognition. This is most of the patterns that I look for right here. Last week we looked at the ascending and descending triangles up here. This week I'm going to look at the bullish and bearish continuation triangles. This is a simple line drawing of a bearish continuation triangle. Typically you'll see continuation triangles form after a strong price move. As you know, the market's got to breathe. The smart money traders that got in the move early will take profit, causing the market to change direction. The traders that got in late freak out and close their trades, pushing the market even further in the opposite direction of the big move. When prices push back against the initial trend a bit, the smart money traders will jump back in the market in the initial trend direction and push it back the other way, and so on, with fewer and fewer traders getting into the fray, which causes the price to wind up tighter and tighter. Here are a couple real live examples of what I'm talking about. Remember, never expect these patterns to look perfectly symmetrical or anything. In fact, they're often pretty raggedy looking, and that doesn't seem to matter as to their effectiveness. On the left is a snap of the Amazon daily from yesterday. You can see the strong bearish move right here, and then you can see this wind up happening right here. We're getting lower highs and higher lows. Price is just getting tighter. I like to say winding up. Price is winding up like a spring. On the right is another example. This is a daily chart of Dish Network. Really strong, powerful downtrend, and now it's winding up. You can see this one has progressed even further toward the apex of the triangle, so this probably is close to breaking out. I included the volume and volatility on this chart so you can see how both the volume and the volatility have dropped off. And of course I use average true range for my volatility measurement. I use a 14 period moving average on it, and this moving average is a 20 period moving average on the volume. Having the volume and the volatility drop off like this suggests that there are fewer and fewer traders involved in moving this price back and forth. When the pattern finally breaks, it should break explosively. Okay, so we call this a continuation triangle. I bet you can't guess why. Just kidding. Of course we call it that because we anticipate that the trend will continue when the consolidation breaks. So this is a downtrend into the pattern. We anticipate a downtrend out of the pattern. Same over here. Downtrend, downtrend. Now, is that 100% sure? Of course it isn't. I'd be a gazillionaire if it was. Nothing is ever 100% sure. Well, I'll tell you one thing that is 100% sure. This is either going to go up, down, or sideways. That is for sure, 100%. I hadn't figured out how to make $1 gazillion on that information though. Anyway, we expect it to break in the direction of the incoming trend, but I'm willing to take a break on this pattern in either direction. If it just dribbles out the side like so and doesn't make any commitment to either direction, then I will stand aside on this. That does happen, but not very often. Also, if there isn't sufficient volume on the close outside of the triangle, I'll stand aside for that as well. There must be at least average volume on the breakout candle. So when this breaks out of the pattern, like I said earlier on the Papa John's, if this breaks out of the pattern in either direction, I want to see good volume on the move. I want to see a commitment from a bunch of traders. Should reach up here to the average. I want to see at least 75% volume for a half size position. And that's my standard operating procedure on all consolidations. You'll hear me repeat that on each setup just to remind you. And here's a live example of the bullish pattern. This is a daily chart of spot gold. You can see this strong uptrend going into the pattern, and you can see that the pattern has formed right in there, like so. We would anticipate this to break to the upside. Again, this is not 100% sure. It could break to the downside. It could go sideways. Be prepared. Again, volume drop off and the volatility drop off. Now, this volatility lags just a little bit because it's a 14-period moving average, so it could lag a couple of weeks on a daily chart. And the reason why I haven't done an analysis video on these three markets is because I like to see bigger, longer patterns than these. The longer the pattern has been in place, the more explosive the breakout should be. The patterns on these three markets are just a couple of weeks old and are kind of small patterns. I'm going back to something I showed you last week because I want to stress this. These patterns are rarely pretty and regular. They don't seem to be any less effective when they're ugly and unsymmetrical. Remember last week when I showed you this slide right here? You may remember I gave you one of my trading maxims. A line is never just a line, it's always a zone. I'm not going to give the whole long explanation of this again. If you missed it, check out last week's trading video. I will link it below. Just remember that traders put orders all around these lines, so the price will rarely just touch a line and immediately reverse. I want you to pore over hundreds of charts and look for these patterns. Look on all time frames, on all markets. These patterns happen frequently. Just remember, they rarely are going to be perfect. After you've looked at a bunch of charts, these patterns will start jumping out at you and you will see them immediately when you open a chart. And so it's time for me to give you another maxim. Don't practice until you get it right. Practice until you can't get it wrong. Now, that's not today's maxim, but I gave you two for free today. And speaking of trading maxims, I think it's time to look at today's trading maxim. What is a maxim, you may ask? Well, you know, I'm glad you asked, since I'm about to tell you. A maxim is a general truth, fundamental principle, a rule of conduct, or a proverbial saying. These maxims come from various sources, books, the internet, coaches, teachers, or others. The purpose of my maxims is to motivate me to discipline. I suggest you start your own list of maxims to help you in your trading and in your life. Things that you can say to yourself while you're trading to make sure you always do the right thing. Feel free to borrow from my list. And today, I've got another brand new one for you. Trading maxim number 57. If only people understood how important it is to be consistent. Everything that has value in life is a product of consistency. Success, health, wealth, friendships, relationships, and all other aspirations are about consistency. Give this some thought. I think this is pretty obvious as it applies to life, but let me put a finer point on this and discuss how it applies to trading. Consistency in finding a strategy that works for you. Consistency in practicing the strategy so you have confidence that it works, even if it takes you through a drawdown, which they will do. And I just got through talking about practice. Practice until you can't get it wrong. Consistency in following your rules. That's the most important one. When you have rules set up, follow them consistently. Consistency in everything is the key. Remember our Papa John's pizza trade plan. We're looking for a daily close below the descending triangle to sell. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video below for more details. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday and Friday for my analysis videos, and on Wednesday for training videos such as this one. And I'll most likely include a trade setup like I did today. And thanks for all the input I'm getting on these training ideas. Continue to let me know what things are bugging you about your trading or about my trading. I'm up for explaining anything you guys want me to explain. You can even tell me I'm ugly and my mom addresses me funny, because I am and she does. My mom's 94. She hasn't dressed me in a long time. But I am great with that. I don't care. You can insult me if you want to. Just let me know what you're thinking. The only stupid question is the one you don't ask. You know, because if you don't understand something, I can't explain it if you don't ask me. Okay? I just want to make sure you guys got that. Also, follow me on Twitter. I'll put my Twitter link below. Tell all your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great remainder of your week, and I'll see you next time.